The views and opinions expressed in this podcast do not necessarily reflect the views or positions of ACUMA, its board of directors, its management staff, or its members. The podcast discussion presented is conversational in nature and for general information only.
Hello and welcome to ACUMA's On Point Podcast. I'm your host, Peter Benjamin. Today's podcast is going to be slightly different. This is the first episode of a new series of recordings where I'll spend some time speaking with experts on the latest policy issues facing the credit union mortgage industry. These updates will be designed to be quick, yet informative, and something you can rely on a monthly basis. For these updates, we picked two friends of ACUMA to assist. Both are passionate supporters of the credit union movement, Leah Dempsey and Zach Pfister with Brownstein. Leah, Zach, welcome to the podcast. And how are you guys doing?
Great.
Awesome.
Doing well. A little cold here in DC, but
it's not that bad. It's not that bad. It's really, granted, looking at the thermostat on my watch right now, it says 33. It's above freezing. So all in all, not too bad. Now, Leah, Zach, you guys are going to be staples on, the policy podcast for us, really going forward. One of the things that we do normally with the ACUMA On Point podcast is that we it's more of a people piece, general human interest piece. So I don't want to go too far away for that for this first episode. I do want to stay on topic and really focus on policies, but just for the sake of our audience, let's dive into who you both are just briefly. That way our audience knows who you guys are and get familiar with you on that monthly basis. We'll start with Leah, please.
Well, nice to meet everyone that I haven't met yet. I'm really excited to be here. As Peter mentioned, Zach and I have been working with credit unions for a long time. We're both alumni from former America's Credit Unions, used to be CUNA, and have been working in this space for more than a decade. Have seen a lot, a lot change at the CFPB and a lot of the agencies that regulate credit union world. And we're just excited to talk a little bit about that and some of the opportunities and challenges for the movement right now in DC.
Awesome, thank you, Zach. Your turn.
Great. Well, thanks, Peter. And let me just echo Leah's comments. We have been very fortunate to work with the credit union movement for quite a long time in many capacities. I started my career on Capitol Hill, working for several members of the House and Senate. My first job off of Capitol Hill was at the Credit Union National Association as one of their federal lobbyists. And then around 10 years ago, I joined Brownstein and thankfully was fortunate enough to recruit Leah, a few years later. And the two of us now co-chair our financial services practice, where we represent wonderful clients like ACUMA, the America's Credit Unions, and many other financial services clients across the space, which gives us a really good both bird's eye view and drilled down view of all of the various happenings across the federal policymaking and regulatory landscape in Washington, D.C.
Awesome. Thank you, Zach. So, like I said, and again, is it really happy you guys are here? Happy, we have this partnership and being able to provide this additional value for our members. And like I said, this podcast or this series of podcasts that's part of the On Point podcast is really designed to provide our members, our listeners, with an update, a quick hit update on the policy issues impacting them. Again, credit union mortgage professionals. So that being said, what's happening in DC? I read everything, right? There's a lot. You can just read the news, watch the news. You can tell there's a lot happening in DC. But if we had to do some quick hits of things that are important in January of 2024, or things happening in January 2024, what would they be? Whoever wants to start, by all means, jump in.
Peter, I'm happy to kick it off. It's probably important to put some current dynamics into perspective as well. For the listeners, this is not an ordinary year in Washington, D.C. It is a presidential election year for a president who is running for a second term, and by extension, his regulators are running for a second term. The Congress is split. Democrats control the Senate, Republicans control the House, but the margins of power in each of those chambers are so infinitesimally small. They are almost 50-50 exactly in both chambers as well. So you have a 51-49 majority in the Senate. You have on any given day, a 2 to 3 seat vote majority for Republicans in the House. And that can make for some very challenging sausage making. I would argue that to make matters even more interesting, we are seeing what many view as a very consequential election, because truly everything is up for grabs in November. So it is as likely for the Senate to flip from Democrats to Republicans as it is for the House to flip from Republicans to Democrats. And I think anybody who is even a casual observer of politics knows that the race for presidency is going to be one for the books. So what that means is that these policies being formulated in respective committees on Capitol Hill face significant headwinds to make it across the finish line. The old schoolhouse rock, how a bill becomes a law, is kind of out the window in an environment like this. And I'll put that in perspective with some data points. Last Congress, and in a typical Congress, and when we speak of Congresses, we speak of 2-year cycles. Last Congress, 336 or so bills became law out of thousands of bills introduced across all of the respective committees. Last year, 19 bills became law, and we're halfway through this Congress. So there is not a lot of law making going on in Congress, in this 2-year period. And as a result of that, the regulators have been ratcheting up the rulemakings because you have a Democratic administration and a split Congress. So what that means is for an administration to reach its priorities, they will turn to the regulators to start pumping out rules to that effect that they can do unilaterally without Congress's further involvement. Right? They take past legislation that has become law, they interpret it a certain way, they put out a rulemaking as a result. Now, Leah will tell you that some of that rulemaking and how that process works is coming under fire in real time this week. In fact, on oral arguments on the Chevron deference, which as the non-attorney on this call, I'm going to totally defer to her on that. What I would say is
always defer to your attorney. Always defer to your attorney.
She's the smart one. In the immediate term, Congress is grappling with the basic, most foundational tenets of government, and that is funding the government. But what that means is, they're racing against these deadlines to keep the lights on. And in turn, these vehicles become, kind of carry-alls for other priorities. So you've probably heard some chatter around a potential tax package that's coming together in real time. There's a markup tomorrow that could be on the floor in the coming days. But right now, first and foremost, Congress needs to pass a what's called a continuing resolution, but basically an extension of funding for the government through March. They get over that hurdle, and they're going to start pivoting to some of these other priorities, which we can talk about here in a little bit, on issues such as AI, for example. But I'd love to hear Leah's analysis on the regulation side of things, given that we are witnessing the Supreme Court kind of delve into this right here, right now.
Well, that's a great point. And this is really kind of a nerd's dream, all the stuff that you kind of outlined right now. I've been talking about these Loper oral arguments for the past 3 weeks, and all the 25-year-olds in the office are sick of hearing me talk about it and probably making fun of me behind my back. But it was exciting to kind of just watch it. It's something that I learned about in law school 15
Leah,
years ago.
If it makes you feel better, Cameron makes fun of me all the time, and
yeah,
so it's okay. It's okay.
But no, seriously, I mean, it's kind of a crazy time right now, as Zach kind of outlined. In a few weeks, we have the State of the Union coming up, and no surprise, in an election year, a lot is being timed around the State of the Union. It's a great opportunity for someone who's running for president again to get some of their campaign items out there. And we're certainly seeing that at the regulatory agencies right now. You know, as Zach said, with the gridlock in Congress, you know, the best chance this administration has of getting things on their to-do list done is through the agencies. We've certainly seen the CFPB ratchet things up. You know, this week they put out a sweeping overdraft proposal. We're expecting that they're going to do something on credit card late fees probably within the next few weeks. We know that they're looking at, you know, jiggering the entire Fair Credit Reporting Act and the credit reporting process. So all of these things are really on their own massive changes, let alone happening all at once. And there's a reason for that, because the administration, you know, during the State of the Union in a few weeks, they want to stand up there and say to the American people that they are addressing things like junk fees, and they're trying to put money back in Americans' pockets. And you know, it's really important that credit unions and the credit union movement, you know, take a close look at these things, because some of them sound really good on paper, but in reality, they start to squeeze parts of the credit union that can make it more difficult to offer mortgage products or different products and services. And it's really important that, you know, the credit union voice is part of those discussions and educated on some of the compliance burdens that they might be in the near term facing.
So if I could jump in real quick. So, you know, we talked about the election, right? And we hinted at the possible government shutdown, right? You know, kind of looking at the State of the Union that's coming up, and even, you know, the administration and every head of department at this point in time, it's almost like their last ditch effort to get whatever they possibly can, as in good faith, to show the American people, hey, we're trying to protect you, right? And then is that basically what's happening right now?
100%. I mean, that's spot on, Peter. And this is not, I mean, this is typical of any presidential administration in its final year looks at this year as both a legacy building opportunity, right? To make good on as many promises for that first term as possible, but also as you kind of framed it, kind of a look, the clock is ticking, and an election will happen in November, and voters will go to the polls, and they may get another 4 years, and they may not. So, you know, cementing that legacy and cementing on those principles of that administration is kind of, you know, tantamount to a year like this. So, I think you hit it right on the head.
So if I may, it's, you know, thinking back, you know, when the current administration was, you know, going through the initial election process and, you know, beating the campaign trail, you know, affordable housing, you know, improved, you know, a more diverse home buyer, or whatever, however you want to frame it up, right? Accessibility to housing was something that was the drum that was being beaten quite often, right? It doesn't seem as though much has occurred with that. Will that be a torch that's once again picked up, especially knowing the current market, the current state of housing right now?
I think so, and you know, despite mortgage rates, you know, dipping down to 7%. Again, you know, we're talking about 2 years ago when we had mortgage rates at 3%, right? And so I don't think that, you know, that's a big deal, but I don't think that's a big enough deal for Congress or the regulators to look at this and say, okay, everything's good. Like, we don't need to act. And I do think you're seeing the issue continue to percolate, and we expect more action on this again as they kind of get over this hump of these March deadlines. I think we do anticipate to see more activity on that front. We know that that Director Thompson is anticipated to be testifying before the banking committees at some point in April. I think that's kind of the goalpost right now that we're hearing to get that initial face-to-face with Congress. It will be the first face-to-face after the 100-year review report. The FHFA put out plenty of recommendations that they plan to pursue administratively. A few others that would likely require congressional action, but that'll give us a good preview as to where lawmakers are on some of these issues, as well as Director Thompson's plans for the year ahead. But again, back to your earlier point, if this administration changes, so too potentially does the direction that the FHFA takes on this report, right?
I chuckle, but it also changes the direction of CFPB.
Absolutely. It will change the direction of the CFPB more than any other agency in any administration, right? We've seen the CFPB become kind of a ping pong between Republican and Democratic administrations, and arguably you couldn't have a more night and day difference about the approach of a given agency than you do with the CFPB, given the fact of how it was created and who supported its creation back in 2010. And so that's to be expected. But, Leah mentioned this, but we have another Supreme Court case on the horizon that's going to determine whether or not the CFPB is even, constitutionally structured. So if that goes out the door, I personally think to keep this PG, all heck will break loose. But
PG-13 is okay. PG-13 is
all right. So I mean, the CFPB is that's another great example.
All right. Sorry, Leah, back to you. I interrupted, but I think it was a good conversation, but please, back to you.
No, I guess just one thing I'm observing that I'm kind of surprised about, back to the affordable housing question. The regulators haven't stopped, and I don't know that they're going to regulate themselves out of the problem that we're in. A lot of times, the more regulation in this area, the harder it becomes to provide affordable housing. And we just filed this week, the Basel III comments were due, and almost universally, pretty much all stakeholders agreed that it's going to make the economy harder to function in, and it's probably going to be harder to get capital in places like the housing market. So I don't see that as a solution to affordable housing. We're seeing, FHFA come out with a lot of new regs related to tenant protections, and we're seeing HUD come out with things. And, as you talked about, the CFPB has a whole host of new ideas. And, sometimes it seems like the left hand's not talking to the right hand, because if all these things come out at the same time, it's really squeezing people like credit unions that don't have the resources to come into compliance with 10 different new regs at the same time, and also help the goal of affordable housing. So I am interested, as we get closer to the election and some of these regs become closer to final, how all of that plays out, and whether, we see some relief for the Americans out there that are looking for housing options.
Can I just add on the Basel III piece? I think is important. I think it's important for, all financial institutions to keep monitoring those developments. Because when you drill down on this, Peter, this kind of goes back to what's happening in January. Well, I think this is another real time, moving goalpost here. We are seeing an increasing amount of bipartisan discontent with the Basel III endgame proposal. Just this week, there was a bipartisan letter from a group of Democrats and Republicans on the Financial Services Committee expressing concerns, a group of members from the Congressional Black Caucus raising concerns. And I think whenever folks, peel back the onion and they start making the equation that, higher capital standards likely result in, less availability or access to credit. And then you start looking at who is that going to impact in terms of who's going to be less accessible to that credit. Then you start seeing, credit score thresholds go up. You start seeing, the lower income and, middle income components of the socioeconomic graph here being most directly impacted. And then in real terms, if you want to do, dollars and cents, that means fewer car loans. That means, higher standards for a mortgage. That means fewer mortgages, depending on the institution. And so while, this is focusing, a lot of the focus is on the big banks and the fallout of SVB and the like, we all know this all rolls downhill, right?
So let's say as a result of Basel III, right, there is a credit tightening, right, or even to the point where some banks pull out, right, or dramatically reduce the number of loans that they originate. That paired with the liquidity issue that some credit unions are facing right now, it's almost a perfect storm. Yes, there's opportunity, but you can't originate it, and you can't originate it at the credit quality that you were originating it at, or the interest rate that you're originating at. So it does have a major impact. If it stays the course and it stays as is, the financial impact of credit unions, I think, is more significant than what we're giving it credit for.
I agree.
So what else is happening? So, Zach, you hinted at AI. What's happening in AI?
So AI is an interesting one, right? Going into, let's say, the beginning of last year, really, I think you can pinpoint it to the advent of ChatGPT and OpenAI kind of introducing AI to mass consumption, right? And people quickly started, the everyday user quickly started seeing how the various applications of AI could help them write a speech better, help them with their marketing material better, et cetera, et cetera. Very quickly, though, I think ChatGPT became the most downloaded app in history, or the first to reach a certain number of millions, hundreds of millions of downloads, and it started drawing attention to policymakers about the beneficial applications of such a technology, but then also the threats that could ensue to we've got a spectrum here, Peter. It's we're going to use this for a chatbot, for our customer service, and also we don't want AI to start a nuclear war, right? I mean, there's a full spectrum of folks going up and talking to policymakers on that front, and accordingly, some key policymakers in the House and Senate latched onto this very hot issue, right? And I say that hot in terms of publicity, but also hot in terms of like complexity, right? Because everyone is looking, companies, lawmakers, regulators, you're looking at AI through a blurry lens, and they think they know what they know, but they also very much know what they don't know. And that's problematic when you're trying to make law or regulation, arguably for all intents and purposes, from scratch, right? And the fact that there's some irony in this generative AI is growing more advanced by the day, and regulators and policymakers move at a snail's pace, right? So there's kind of this joking inference, in DC that like they're never going to catch up with the AI, right? It'll take them 5 years to regulate, to put in place a piece of comprehensive AI legislation, and by then,
ChatGPT 8 will be out.
Exactly, and it won't be right. The AI will reinvent itself to avoid the regulation. And
well, Zach, I write so the last Friday of every month I put out we put out what's called ACUMA footnotes. And one of the issues, and it's weird things, like things that interest us. But one of the issues I talked about how AI is going to take over the world, and we're all going to be slaves to AI eventually. It's true. It's going to happen.
It's like the Terminator, that's
Matrix. Exactly it. Oh my God, that's exactly it.
It's like,
or I have young kids, so it's like WALL-E.
Yes, yeah, WALL-E. Well, so I mean, just real quick, so where they are on it is, Senator Schumer, Senate Majority Leader Schumer, convened a task force, a bipartisan task force in the Senate, made up of some key Republican and Democrats to, kind of convene some working groups over the past year. They've had in all the big players in AI, the Googles, the OpenAI, Microsoft, et cetera. But they've also, sought to convene, smaller industry working groups because, the application and both the, threats and opportunities are different across industry sectors. And Congress is trying to better understand what business utilizes AI for, right? They want to navigate and develop legislation that promotes the benefits but puts in place safeguards against the potential harms. And so in that the sub bullet of that is that long-standing lawmakers who have led on issues like data privacy and data security have also kind of come back to the table using AI as kind of a shinier wedge to try to address those issues. And so what we're looking at this year as probably the year where, at least on the Senate side, they try to put forward some type of framework draft legislation. Do we think it becomes law this year? No, because of the aforementioned reasons that why making law is so hard this year. But we do think that they will make progress and make it a priority in the months to come, in the form of hearings, in the form of more listening sessions, public consultations, and the like. And we will likely at some point this year see something tangible in terms of text to react to. I think what the biggest splitting point on where this could potentially all fall apart is the question of how it is regulated, right? There's considerable angst, and rightfully so, I think across industry sectors that, we don't need another FTC. We don't need another CFPB. We don't need another, AI acronym regulator. This should be housed somewhere within Commerce or NIST and be a, kind of a joint agency approach to establishing those types of frameworks. So you don't have a situation where in the minds of some, you have kind of an unaccountable regulator on a very challenging issue that is constantly evolving and will require constant adaptation.
Yeah, Zach, to that point about the agencies, we already saw the CFPB come out a few months ago with a blog post that basically said chatbots need to comply with consumer protection laws. And one thing that I think is just important to keep in mind is to explain, particularly to regulators, maybe what is not AI, because we're seeing some of these frameworks pop up at the state level. I just had a conversation with someone in Washington state last week where there was a piece of legislation that, was pretty problematic. And I think what people don't want to happen is to have a program that they're using for their credit union or for their company that's really pulling from internal resources. It's not necessarily AI. Start to go down the path of being regulated like AI once we see how AI is regulated. So, as we're kind of drawing those lines and thinking about what the future looks like, keep in mind that people might not like what the CFPB does to regulate AI, or they might not like what the FTC does to regulate AI. And you might not want that to be a very broad definition of what is included in there. So it's going to be really important for credit unions to think about, what is included and what may not be included, what they're using right now.
And it might not hurt for credit unions who find themselves utilizing these various technologies to do kind of an informal internal audit on ensuring that they know how they know how the AI is programmed. They know the parameters and metrics that go into what results in the AI spitting out its decisions or calculations. Because I will tell you, and Leah knows this all too well as well, I'm going to use an umbrella term here, but kind of the real estate industry has been kind of a favorite target of certain policymakers, using them anecdotally in their arguments on issues around algorithmic bias, which in most cases is tied back to advancements in AI. The more you automate, or the more you have a computer or robot or chatbot or whomever or whatever making loan decisions, looking at rental applications, determining creditworthiness, there is room there for mistakes to happen. And it goes back to, who programmed the algorithm and what, parameters they put in place. And some, very big popular names have been kind of drawn into scrutiny. I believe Zillow was one of them at some point, where the committee opened an investigation on their kind of mortgage worthiness practices across various demographic groups, and they were not pleased, right? So
right.
It's just good due diligence to just know the product that you're using, because to Leah's point, we don't know how they will regulate, but we do know that they can react negatively right now, with the data that they do have.
Unfortunately, we're running out of time for the policy podcast. But one final thought before we start transitioning away, I find this interesting, and the reason why it's interesting is because if you peel back the layer, right, and you really think about some of the things that both of you said, if the definition of what AI is in theory hasn't really been defined yet, or how they're going to regulate it, some of the purest forms of AI you could argue as DU and LP from Fannie Mae and Freddie Mac, right? You could easily argue that is AI. And you could easily, throughout the mortgage process, see that those two automated underwriting systems are creating credit decisions, and in some cases, denying people upfront before it even gets to a physical body checking it, right? So it's interesting. Will that come into play? Will that be regulated, and how will it be regulated, or is there an exception to it?
Right.
Big questions, right?
Indeed.
Well, Zach, Leah, thank you very much. That's unfortunately all the time we have for today. Really do appreciate your time. I found this very interesting and very beneficial. I know our listeners will too, especially today and going forward. And really to everyone else listening, these are things, this type of podcast is what you can expect for the policy podcast. We hope you enjoy it. Again, Zach, Leah, thank you very much. We appreciate your time today. And I'll just go ahead and sign out. Everyone, thank you very much for listening. We understand that you are busy, and we appreciate you spending a little chunk of your day listening to our fun little podcast. Other than that, everyone, take care, and see you next time.
Thanks for listening. We'll see you next time at the ACUMA On Point podcast. If not already, be sure to subscribe and give us a 5-star rating. For more great episodes and information, be sure to visit us online at acuma.org, and to get the latest updates, head over to our LinkedIn page.